Hey guys, this is going to be a short video about seller carryback loans. So remember, if you find it helpful, take a minute to like us. Don't forget to subscribe to our YouTube channel. If you got any comments, take a minute and comment below. Happy to try to address those for you along the way. So exactly what is a seller carryback loan? It is nothing more than a lien on the property, a mortgage, to the seller. That lien could be in first lien position, second, third, or something different. The terms and conditions can be whatever you and your seller have negotiated. We just call it a seller carryback because after they sell the property, they're going to carry back a lien on that property with you, the buyer. So why would a seller agree to a seller carryback? Well, lots of reasons. One, maybe they want to get a return on their money secured by their property, first lien, second lien position, whatever that might be. Maybe it's just part of the negotiation. They need to get out of the house. This is one of the alternatives available to them, and they're willing to do it to help the deal move along quicker. There's a plethora of reasons why sellers do this, and it's all based upon their situation, the property, and the terms and conditions that you're offering to buy the house. So let's just talk about seller carryback transactions. And really, these are not complicated issues, and they're fully negotiable. That's kind of the fun part. And a seller carryback loan can take many different strides along the way. Let's just go through some of the examples that could happen. Maybe you're buying the house from a seller who has no debt in the property, and they're going to carry back the first lien mortgage. Now, technically, that is a seller carryback mortgage on the property. It's just in first lien position in that situation. Let's go to the next level. Maybe you're going to get a mortgage loan. Maybe it's a DSCR loan, standard loan, bank loan, whatever it might be. And maybe you've got to come up with 20-25% down payment or more to make that loan work. And either you have some cash or don't have any at all. Well, can the seller carry back a loan on that property? Absolutely they can. Now, their loan is going to be a second lien on the property, secondary and subordinate to that primary first lien mortgage out there, whatever that might be. Now, of course, the issue with that is if you default in the first lien and they foreclose, it would wipe out the seller's second lien along the way. So that's one of the risks of a seller carryback transaction when out there. Now, if you're going to do a seller carryback loan when there is a first lien mortgage involved, you better let them know because that can be a condition of lending. Now, typically, most small commercial banks have no issue with that because they know that they're in first lien position, and oftentimes they really don't care. However, mortgage companies take a different approach to that. So make sure you always talk with your loan officer, inform them exactly what it is you're doing if you're going to use that seller carryback at closing. Now, after closing on a property with a mortgage company where you put down, let's say, a 20% down payment, and so the seller gets all of their money, could you go back to that seller and now carry back a second lien on the property? Absolutely. The difference of that is that is not technically a seller carryback loan. It becomes a private lender second lien on the property. Call it same thing, only different, but it is the same thing basically. Now, oftentimes we may be buying a home subject to the existing debt, wherein the seller has some legitimate equity in the property, and whatever the terms you negotiate may include them carrying back a second lien on the property. Now, by the way, they could carry back a third lien on the property. I've had situations where I've actually bought a home subject to the existing debt. I had to borrow private capital for $20,000, $30,000, $40,000, but the seller was still going to obtain a third lien carryback on the property. Now, all of that was pre-negotiated, pre-disclosed, so the seller knew exactly what position they were going to be in at time of closing. So if you do those kind of things, you want to make certain you put that in writing in advance of closing, And don't spring it on the seller at the closing table what you're doing. That's not a good way of doing business. So remember, whenever you're doing a transaction where there is going to be a carryback, you can put these terms inside of your contract, in your disclosures, in a seller financing addendum, whatever it might be, but get it in writing. From there, you can negotiate the terms on these any way you want to. There aren't any rules or regulations. It could be a principal-only loan. It could be an interest rate loan of X, Y, or Z. It could be an interest-only loan. It could be principal and interest. You can do whatever really floats your boat and what you and your seller negotiate along the way out there. But once you negotiate those terms, put it in writing in advance of closing as part of your contract. The important part about seller carryback is to ensure that you and your seller are all on the same page. You've negotiated the terms, interest only, principal and interest, short-term payoff, long-term payoff, balloon payment, whatever it is you guys have come up with. That's kind of the fun part of this business, is a chance to negotiate these deals, structure them, and put them together in a way that works for both the buyer and the seller. So guys, I hope you find this helpful about seller carrybacks. They're really not too complicated. It kind of is the Wild West to a certain degree in what you can do because it's fully negotiable. And what you're going to find out there is that sellers don't even know that they can do this until you present it to them. So have a good understanding of what you can do, how you can do it. Think through your transaction. Put a deal together so that when you present it to the seller, it's clear, it's crisp, everybody knows what's going on, and from there you can negotiate and mold the loan appropriately on what you and your seller negotiate at the end of the day. So guys, I hope you found this video helpful. If you found it helpful, don't forget to like us. Take a moment, subscribe to our YouTube channel. And if you have any comments, comment below. From there, if you have more questions, want to learn more about the creative real estate industry, take a minute and visit us over at the ownerfinancenetwork.com. And guys, we'll see you all next time.